We are supposed to appreciate, ladies and gentlemen, the qualitative measures. We are supposed to appreciate here the qualitative measures, and of course the quantitative measures. And the qualitative measures, or rather, to be able to tackle all this, we must, number one, be able to know how to measure the firm's performance, KPIs, using the famous balance scorecard. We have number two, the Fitzgerald and Moon model, and then of course we have now the other KPIs like the return on investment, residual income, right? etc. So we want to start with the first one, which is quite straightforward, called the famous balanced scorecard. So please mention there for me, balanced scorecard. So before I look at the question that came last semester called under balanced scorecard, I would want us to have a quick talk regarding this balanced scorecard, general talk regarding this balanced scorecard. Remember, a balanced scorecard is that instrument that gives us performance of an institution from how many perspectives? 4 perspectives. It gives us the scorecard, performance of any institution from 4 areas, 4 perspectives. The first one is the financial perspective. So we have here what we call the financial perspective. That's number one. Then number 2, we have what we call the customer perspective. Then we have the internal business processes, perspective. Then we have learning. And innovation. Learning and innovation, or learning and growth perspective. Learning and innovation perspective. So whenever they talk about performance measures and a balanced scorecard, you're supposed to know that really your performance has to be what here? Your performance has to be balanced somehow. The moment you score very well in financials, and then you disregard great performance in the other metrics, your performance will not be balanced. You'll only be taking care of one stakeholder, who is the shareholder. That's a greedy perspective, because here you are posting huge profitability. Profitability in this case, it belongs to who? It belongs to the shareholders. But remember, as you post huge profits here to shareholders, what about in this case here, those customers perhaps that you never gave the right quality? But for example, in this case here, you were there to lower the quality, bought inferior raw materials, etc., for you to post what here? High profits. What of employees? Employees that, for example, you paid little salaries, simply to minimize on your costs, to be able to post a high profit here for the shareholders. If you want, ladies and gentlemen, the firm to grow, it has to grow equitably. There must be fairness. There must what we call what here? A balanced performance. There must be a balanced performance. Now listen to me very carefully. How does this performance here be balanced? The first one, we are not saying that financial growth is bad. It's good. But remember, it has to grow amidst the other factors. So under financial performance, we would really look at our organization and see how we are growing in terms of revenues. So we expect, if you're writing a few things here and there, we expect revenues to grow, and we expect costs to be minimized. As a good CEO, always you fight on growing your revenues. You fight on reducing your expenses. Very important. So in short, ladies and gentlemen, under the financial perspective, we shall be so keen with what? whatever costs we incur, we shall be looking at the return, our return on this investment. So we are saying that amongst the many important criteria that we shall be looking to measure the financial perspective, we shall be looking at the return on investment. The return, how are the profits, right? Vis-a-vis what we are investing in this company. So ROI is very important. Now from there, ladies and gentlemen, we go to the customer perspective. Customer perspective, give me just 1 minute. 1 minute, I'm coming back. Balance scorecard is saying we've got how many perspectives? 4 perspectives. So we have the financial perspective. We have the customer perspective. We have the internal business processes, our internal processes. We have what we call the learning and what here, the learning and innovation. Some books will call this one here the learning and growth perspective there. So I've already discussed the first one, financial perspective, and ensure that your ROI is increasing, your return on investment is increasing. And how do we do that? By ensuring that we're able to post higher revenues. We're able to post higher revenues every day. We're able to post our profits every day. And then, of course, whatever investments, whatever costs we're incurring here for our internal activities, should be going down. If you look at companies like Safaricom, these guys are great in terms of profitability. In terms of revenues, they're raking in billions of Kenyan shillings. But again, if you go to the same Safaricom, you'll be surprised that these guys are laying off workers simply because of what they would want to minimize their costs. So anytime they see any redundancy, however little, they'll always do what here? Fire people.